Hey, hello everyone, and welcome to my channel. I am Chris here with Elliott Wave Cafe. We take a look again at another weekly wrap up. It is Friday. It was a full day in the market today. Yesterday it was 4th of July, so hopefully you had a good one if you celebrated it. From people outside the country, it was maybe a well taken break as well from the price action. But let's see kind of what happened this week and where I think we're going next. I always like to start from the larger perspective, looking at the quarterly charts, then dropping down to the monthlies and the weeklies, and then doing the kind of the heavy work on daily and intraday basis, every single day here on Elliott Wave Cafe. But from a longer perspective, this market's continue to grow and develop, and new companies are coming out, new products. We continue to grow. We're in the age of AI now, and the uptrend here is clearly very strong. I'm labeling this as a series of ones and twos. That's a super cycle, a cycle, wave two. From 2009, 2008 crisis in here. Then we go up in a wave one. We do a quick flight in a wave two with the COVID low. Then we go up in another wave one. So you got your cycle, then you got your primary, then you got your intermediate wave, and then that's a wave two. And now we're in the middle of this larger wave three. If I go and I take a look at the weekly time frames, it looks something like this. So here is your 335 flat for a wave two, then up in a one, pretty sloppy wave two. During 2022 correction, 1-2 for now, another 1-2 in here, a nice little pullback, 50%, and then in a larger wave three that's kind of taking place right now. I don't think that's a wave four. It's very small, very tiny compared with this. So I think if a wave four, this kind of orange labeling, it's coming, it's going to be a bit later. And then we should be pushing higher. I think that could start forming maybe in the fall or some point next year. We'll see. But for right now, not a lot of evidence of that starting necessarily. And kind of trying to find the top of this market, it's very difficult, and I would not suggest it because sticking with the moves, with the uptrends. Here is a daily time frame. I think it's better and just kind of following the trend until there's good evidence that something deteriorates really heavily. I'm hearing talks of a rate cut here probably coming in September from the Fed. Maybe a couple of them this year, who knows. But as always, the stock market, it looks forward, right? It's anticipating kind of what's happening in the economy, and right now what's happening in the market here doesn't really suggest any fear of recession or anything like that. Even back here during this correction, there wasn't a whole lot happening economically, if I remember correctly, but it was just the fact that we had a bunch of rate hikes, right? And that kind of hurt the market and growth of some of these companies. But for right now, this continues to look, I think, as a pretty healthy uptrend. You might argue about breadth, maybe lack of participation from the small caps, and the large companies here, these Magnificent Seven, and even more than that, right? With pretty strong uptrends, continuing to make new highs after new high, and that's pretty bullish. We can sit here and argue all we want about all kind of negatives underneath the surface, and there's a lot of macro people that spin this in whatever way fits their narrative. But the truth is, the price is trending higher, and that's the obvious thing on the chart. And in my view, that's kind of what we have to follow. That's the price. And we had a little bit of a pause last week, a little bit lower volume due to the fact that there's not a lot of trading going on maybe for the past couple of days in here, but still a pretty good close in the all-time highs. The S&P is trending here very nicely, and really no evidence. Bottom line is you have 5,300 as support between 53 and 5250. If you ever come back, you have the 10-week moving average trending very nicely, and we'll see what happens next week. But for right now, this looks good. And if I take a look at this chart every day in the room, in our on the website and in the chat, I talk to the guys about this because this is a very nice way to kind of look at the trend, and you can see how you have very nice consolidation, a few days of sideways price action, then you break and then you continue to go. You have the 20-day kind of defending the downside, and you have the 50. We're looking at the RSI to be above 50. That's a nice trending market. We're looking at volume to be near or maybe more than average on breakouts, a PPO that's above zero. So these are just some other technical signs besides just kind of watching some of these wave counts. But overall, three white candles in here, that should bode well kind of going into next week. And the first support here will be 55 in case we're going to test that. So that's the S&P. Let's take a look at the, in terms of if you take the S&P and you kind of equal weight it, you can see that it's a bit sideways, not necessarily bearish. You can see the weight of these kind of larger stocks on the market and how important it is to continue to own those and favor them rather than some smaller companies that don't have realistically good growth prospects. But the RSP in here, it's just a little bit sideways. I don't even know what this pattern is. Maybe some kind of a 1-2 in here. We'll see if it's going to break 167. NDX, just a couple of weeks consolidation and just a beautiful break higher. We're starting to get a bit extended from this 10-week moving average. So I don't expect this to be straight on up for the next several weeks. We're getting into a period of summer, so expect to see maybe more of these candles, pause, sideways, maybe a bit higher. For me to kind of start to think about a larger correction, you have to see something like this, more of a weekly distribution. The market is not going to reverse in a week, right? Not even in 2 weeks. I think it needs a whole lot more, where you can see bulls losing momentum, bears stepping in, trying to sell, the bulls come back, buy, then again you have selling, distribution, moving into defensive sectors. Like, all this thing takes time. These companies and these money managers and pension funds, they don't have, they can move in and out of positions that quickly. That's why it takes such a long time to form a top and to start to sell and to get up in stuff like Nvidia and Microsoft and Google and Amazon. So those saying that the market tops just like that and you're crashing, I think it's and if you go back and study tops, it doesn't happen like that. Sure, I mean, if you go back and look at the Nasdaq and in 1999 and 2000, and yes, there was a very frothy market with a lot of with the .com and all, but we're not there. We're not there in none of this behavior resembles that even slightly. Nasdaq Composite here, right? You have a lot more stocks in this index. Again, just a pretty nice break. Good volume coming in here last week. This week a bit slower, obviously, because it's a shorter week, but continues to look pretty healthy. Semiconductors, they give a little bit of a signal of maybe a bit more of a pullback, but we're coming right back and closing back at the high again. Just a new all-time closing high, I would say, right? Because this one closed below. This one was below the high of this candle, so that's pretty strong. This remains a favorite sector. You can see that the semiconductors, but the software sector is also coming back pretty good, and there's pretty good breakouts out there as well. Taking a look at Magnificent 7, that's an ETF that kind of has all of those large 7 stocks called MAGs. I mean, look at this move. Sure, sometimes when you get such a high volume, and when it comes to ETFs, you kind of have to be careful with the volume reading, but a large move, usually after such a large move, you're probably going to get some pause. Doesn't necessarily mean it's bearish, but again, you can see why the indexes are moving the way they're moving, and kind of how much weight you're getting from these large 7 stocks, and especially not Netflix, but Nvidia. I'm sorry, it's Friday afternoon. I'm tired. Tesla, right, had a pretty large percentage move, and that probably contributed to a lot of this. I think that's probably going to kind of slow down next week and pause for a while. So expect this to kind of go sideways a little bit and digest these moves. Dow Jones, it's setting up pretty well here, I think, for a breakout higher. Watch 40K. I think we're going to take it. Probably go to 41, 42 over the next several months. This is nothing else but a sideways correction, and we should be trending higher following this. Looks pretty good. You have a nice 40-week defense in here. It's just kind of taking its sweet little time. There's a lot more value, in this index than growth, so that's why it's a bit delayed. Small caps continue to struggle. False starts, very volatile, pushing up, down. Can't really, catch a break just yet. So we'll see. Maybe once the rate cutting cycle starts, these companies will come back in favor. But looks like investors are not really interested in these smaller companies. They continue to prefer, the safety and the value of these kind of larger caps, and you can hear arguments that you don't have a lot of breadth because these companies don't participate. Well, looks like they really don't have to, right? If you're in the right stocks out there, you can enjoy pretty good profits. And the problem with these are that they they depend a lot on the interest rates, and very volatile. A lot of these funds don't really own them. There's not a lot of volume behind them, things like that. So eventually we'll get a break out of here and we'll start trending, and I'll be interested to participate if I can. But above 205, maybe more than likely above 210. Maybe it will happen at the same time as the Dow starts to move. Then you'll get some small caps also moving. But I doubt very much that they will dump the large stocks and buy a bunch of junk in the IWM, right? Talking about these large firms, I doubt that. Bitcoin, finally cracked lower in here. I talked, into my updates every single day about the dangers that Bitcoin had with the move. Losing that 10-week moving average, closing below it, how he was deteriorating without being able to break 70,000. We closed those positions. The long ones open after the crack up here to the upside, and there was no point in kind of hanging around. And you dropped from 67 to 52,000 right into the 40-week moving average. Very important, I think. This shows you that we're in an uptrend, and for this to turn around and start to create a bearish, that'll take time. So I do not expect this to be, any kind of a huge Bitcoin sell-off, right? We'll see what happens here, how many buyers we're getting in at the 40-week. I'm expecting a bit of a sideways move, and if he really wants to get going to the downside, then we have to close below this. This one has to move flat, something like right here. Let's say that you've gotten a test of it, then maybe you make a new high, or maybe you're even if you look at it from here, right, the first test, then you go sideways, right, for several weeks, then you break, then you come and hit it from below, and then you start to crash more. So as long as we're above this average, I think things are good. If you're a buyer on the weekly time frames, I would not really rush. Right now, I would want to see buyers really kind of coming in maybe next week and creating, bullish engulfing. And I would not mind buying it back at 62,500 or even above the 10-week, right? I'm not really interested in, in catching a low just because it's hitting the 40. Yeah, you can, if you're a long-term holder or you're having some kind of a fund, yes, obviously it's a much better price than 70, and you don't really care that you're buying it at 50 or at 40 or at 30, right? Even though you might be through some pain, but this is a pretty decent place to put some bets for long-term holdings in terms of being accurate and trying to stay true, let's say, to a trading methodology where you're only buying stuff that makes sense based on certain rules. So then this is a bit tough to get in right here, right? You got to see buyers coming in on a weekly basis, and you want to see this hold. You want to see some of these upside levels get taken out, and then if you want to trade with the upside momentum, then it's too early to do that. That's probably above, like I said, above 65. And even if you lose 10,000 in gains or even 15,000 in gains, but at least you have a momentum on your back, and you can see that this gets kind of confirmed as let's say as an ABC correction in terms of kind of the way it looks. Let me see if I have the wave count in Bitcoin. Maybe I showed it to you last time. Bitcoin weekly, right here. Looks corrective, suggesting higher breakout is the next path. So we'll see once this wave 4 completes. I don't want this to get too long, and I think that this 200-day moving average, that 40-week, it's really well placed for this to be a wave 4. We could do something like this and then fall back again, maybe do one more drop and then we go. But I do like this kind of whole corrective move here, just on a pattern perspective, right? And if you get a fifth wave, that's fine. It could be an extended one, it could be a very short one, let's say into 100K, and then you do an ABC back. But that's kind of my plan for right now on on Bitcoin. Again, I don't want to buy a bottom of the wave 4. I don't know exactly what that's going to be. So we want to wait and see what's going on and give us some 5 waves to the upside. Some of these moving averages, momentum, volume, things like that. So we'll watch them. I'll do daily recaps on my written pieces and on my videos there, just to see kind of when it's the right time to put money at work in Bitcoin there. So next it's Ethereum, which is same, very nice. The 40-week coincides with this 2800 level. Looks like could be a very simple corrective move, just like in Bitcoin in here. All you have is a bunch of support coming to the downside, right? So first you have the 40, then you have the 26. So Ethereum looks interesting here, but let's see buyers coming in and proving that to us. Yields came back lower a little bit, right? That should help a bit risk. We don't want them to crash. If they do crash, then that's a problem. Could suggest upcoming recessions, things of that nature. But again, all I got to do is just kind of watch the S&P 500 and the price section there, and that'll tell me. The bond market here, it's been kind of flat for the past several months. Dollar had an attempt to continue to break. It failed. Comes back, but I mean, look at how sideways it is. Like, you really can't make any trading judgments based on the way the dollar is behaving. It used to have a nice uptrend right up into when the market was correcting in 2022. But then once he found that top in September, it's just kind of been sideways. So there's not a lot of read out there. Gold was spending a little bit of time below the 10-week, and then buyers finally came in. I think that's a bullish signal. And, I would be a buyer of gold based on this, just as initial position. So this is the signal that I want to see from the markets, and that's what I want to see from Bitcoin too. This... you can start with a quarter position, half of a position, whatever, and just add on a further breakout to a 2450. You have a stops below 2300, and that's pretty good. So it could be a fourth wave, and you can enjoy a wave 5 to the upside. So I like that. And then also silver. Look, for 3 weeks, there was a bunch of distribution here. 3 weeks into the 10-week moving average. Finally, buyers coming in on the fourth week, closing at about 31.69. Maybe wait for a little bit of a dip back. That could mean that, hey, buyers are coming back into it, and maybe it goes back to 35, 36, towards 40. But definitely, any stops have to be below this week's low as protection, because if you lose that, then that this was a failed move and you got to get out of the way. So very simple, just kind of signals from the market or places where you're wrong, because I think that's the most important one that we tend to forget to ask ourselves. Hey, I get into this position, but where am I wrong? And accepting being wrong, it's tough on a lot of traders, myself included at times, right? Because we all think we learn and we know, and we have time in the markets, and the market it's not smarter than us, and we read and we adjust and all of that. But bottom line is knowing when you're wrong. It saves you a lot of money, and that's something that I personally have to work on more. And if you're out there doing the same, look at that and just make sure that you have those hard stops in place, or even they're mental. Just say, hey, if the market drops below that level, that's my line in the sand. Get out, no matter. Yeah, sometimes it turns right from there, and it laughs in your face, and it makes a new high, and you're left behind looking at it. But you got to have the courage to get back in if a move gets confirmed again. Then you got to try, and you just have to pay the price that the market shakes you out sometimes, and that's okay. So anyway, that's it for today, guys. Thank you for. Let me see. Oil, yeah, still a line in the in this kind of horizontal level, about 84. Not really interested. It's pretty much sideways, like the dollar, not doing a whole lot. So not interesting into oil. And then volatility index pretty low in here, between 12 and 14. So thanks for watching. Visit me here in the Elliott Wave Cafe. This is about $8 a month. You get a lot of videos and the chat and written stuff. So it's as cheap as I can make it, so you guys can learn a lot from my ramblings here and from my ways of looking at the market. If you find it useful, come and find me up here, and I'll be happy to help. So thanks for watching. I'll talk to you later. Bye-bye.